Hey guys, have you ever doubled down on a failed trade, hoping and praying that, oh gosh, this time things are going to turn around and I'll be made whole? Well, what if this common belief is actually hurting, no, not just hurting, killing your trading success and your profits? Today, I'm thanking you for joining both Mike Lamothe and myself for the Trading Truths podcast as we welcome special guest, the real Pat Walker, to,
Whoa.
to debunk two pervasive trading myths. Trading is easy to do. And finally, when a trade fails, don't get sore, just buy more. And Pat's gonna I really like that term. Pat will share his insight and experiences to reveal the truths behind these misconceptions and offer practical advice to navigate complexities of the trading world. So don't miss out. You're going to want to stay tuned to the rest because towards the end, Pat's going to reveal to us who the trading rock star he met a long time ago that turned his trading around. Mike, would you love to introduce Pat?
Yeah, that was sensational, and there's a lot more to add too. So, well, we have the pleasure of welcoming Pat Walker, who is a seasoned investor, educator with deep roots in St. Louis. Growing up surrounded by his family, Pat's early years were shaped by the values of hard work and customer service learned at his father's hardware store.
Yeah.
Pat's passion for learning flourished during his college years, where he immersed himself in subjects like business, music, and psychology.
Yeah.
His dedication led him to a teaching career and eventually to a graduate assistantship that set the foundation for his future. His journey took him to Colorado, where he taught business at the university level before returning to St. Louis. Despite facing personal challenges, Pat remained committed to education and maintained an active lifestyle focused on rigorous physical training. Pat's transition to the world of investments marked a significant turning point. He delved deep into stock research and market dynamics, influenced by mentors like Bill O'Neill and Ed Seykota. His strategic approach to investing has proven invaluable, particularly during market uncertainties. Today, as a private investor, Pat balances a fulfilling family life with his passion for coaching, volunteering, and mentoring. His unwavering commitment to education and growth drives him to share his knowledge and experience, empowering others on their investing journeys. So, Pat, welcome to the show.
Gosh, for a minute I was going, who are you talking about? Holy Toledo. The only thing, yeah, guys, if I grew hair, it'd be even better, but hey, that's the way life is. Anyway, no, thank you for the kind words, Michael. I appreciate it. And thank you for having me. I really do.
Right.
I've known you for several years, more than several years. I admire your work, and I'm honored that you asked me to be a part of this. And I'll just share this with everybody. One of the things that's stated is thou shalt not steal. I'm not going to steal your time, and I'm not going to waste your time, folks. All right. Time is a very valuable, precious commodity. So we're going to get down to it. Just that's
Right
the
on.
cloth that I'm cut from.
Right on. And well, thank you for saying that, Pat, because we are going to get right down to it. And
Right.
I've been debating what question to lead off with. And I know we're going to be talking. You're going to be talking about misconception that trading's easy and the mistakes people make. But before we get into those myths, for you to basically demystify, we have to let the people know what was the biggest mistake you ever made in your trading career.
It's a great question. Here's what I like about these kind of webinars, and this is for everybody, is you cut down right to it. You cut to the chase, getting real. For me personally, one of them was, and I had to get this right, was arguing with price. Arguing with price. Folks, I'm going back decades ago. okay, that I realized I can't do this. And just to put this in context, just so you all know, I was the sole supporter of a family of 6, and we lived off our investing profits. He's like, well, you had a wealthy parents. Oh no, my dad was dead. My dad died when I was in my 20s, and I actually helped support my mom too. So it was a case of I had to try to figure this out. So as far as arguing with price, I learned very, very quickly, I can't argue with price. I have to get in line with price. There's a line here, and so we'll talk a little bit about this. They say, don't get sore, buy more. Please don't do that, folks. All right. I will probably say this phrase a couple of times in this webinar. You are wrong. Don't make yourself more wrong by buying more. Don't do that. Let price be your guide. It will make a huge difference in your investing results, but it also does something else. It lessens stress. It takes all the angst out. Gosh, I don't know what do we do. No, let price guide you. And then I'm going to take it an even step further. I'm asking you, please stay away from 5-minute charts. Please stay away from day trading and scalping. What looks horrendous on a 5-minute chart doesn't look too bad on a daily or weekly chart. It will really help you. One of my backgrounds is in psychology, as I stated, and I advanced degrees, etc. The point is this: don't argue with price. If you do, it causes tension physically and mentally, which leads to lack of clear thinking. If we get in line with what's going on, price and volume, it'll lead to clear decision making for you. And also, as I stated, less stress, which also leads to clear decision making. I know that's a long answer, but it's an important question. If we can't, I was an IBD meetup co-leader for 12 years, and I always tell the people, the biggest part of this game is not what's before your eyes, it's what's between your ears.
Right
You got to
on.
get that straight. Here you go.
Right on.
Yeah. Pat, can we dig into that a little bit with the 5-minute charts or and all that?
Sure.
Do you use multi-time frame analysis, or do you think that or you don't really do that at all?
Great question, Michael. Yes, I do use multi-time frame analysis. This is a
Okay.
great investing tactic. I hate to use the word trading. Okay. I'm not a trader. If I was a trader, I'd be dead. Okay. I'm not into that in and out stuff. Here's what we do. Whenever I'm screening, and I share this with our Mission Winners VIPs, I have weekly charts on the left and daily charts on the right, so that when I'm screening, I go down, and what looks pretty good on a daily might not look good on a weekly.
Yep.
But flip the coin. What looks maybe really good on a weekly doesn't look good on the daily. If we combine both together, both time frames together, it leads to better decision making. We also have to remember that institutions, they're not going to be in here day trading and scalping and doing stuff like that. They're looking at weekly and daily charts to make decisions. So we do the same thing, and it works. I love it. It's the best thing going. So
all right. So you'll use the weekly and you'll use the daily, but you'll leave out the intraday stuff.
that is correct.
Got
But
it.
I need
Do you
to
go
take
up to the monthly?
Yes. Oh, yeah. I'll look at monthly also. Here's an important point, though, coinciding with you, what you asked, Michael. This will really help you. And this is the real world, folks. Again, this isn't hocus pocus stuff. We lived off of it. I didn't have any other sources of income. You know, well, you were broke. No, I was none of that stuff then. I was the only source of income we had for a family of 6 was investing profits. Nothing else. That was it. This is a great tactic for everybody. When a stock is approaching the pivot price, you look at it on the daily. You might all want to write this stuff down, to tell you the truth. Look at the daily chart. If you see volume coming into it as it's approaching the pivot on the daily, take it down to a 10-minute chart or an hourly chart, whatever time frame. Take it down to a lesser time frame. I don't hardly ever go down to 5-minute, okay? But early in the morning, I will take it down to a 10-minute chart. And if I see volume really surging as the stock is approaching the pivot price, that tells us something powerful. It tells us that other people see what we see and they're acting on it. They're buying, and we get in line with them. That's confirmation to buy. And it works great. Anyway, that's nuts and bolts in it. Can I
Love
take
it.
a
I'm very
step
similar
further?
in that
Love it.
regard. Are you, Dennis?
Huh? Say again?
Are you similar in that regard? I'm
I
very similar to Pat and what he just said and how I
I
look
am
at things.
I am extremely similar to that. I am a swing trader. Okay. But at the same time, though, I'm a swing trader with a longer time frame horizon. And basically, I'm looking out, I want to keep some of that position on for months, years, whatever. But I also force myself to take, because this is a learned thing that I had to do, is I had to force myself to take profit on strength and mandated myself to keep my stops basically tight 6 to 5%, and then I'd use a trailing stop as prices go in my favor.
Yeah.
And so, hey guys, if you are joining us wherever you're joining us from, we've got all kinds of. We've got Facebook, we've got LinkedIn, we've got YouTube, and we've got X. Let us know where you're dialing in from. Don't be a ghost supporter. So let us know where you're dialing in from. If you have a question that you want us to ask Pat, please do that. And so, Pat, in your experience in helping lots of different folks through mission winners, what do you think is the most common misconception people have about the ease of trading?
What a great question. And the word that you used, the most operative word in your question, was ease. The ease. I'm not going to sugarcoat this. This is hard. Anybody who says this is easy is lying. Okay. It's hard. It's difficult. But if we can apply basic foundations and turn off the noise, it will get much easier. I focus on several things. I focus on stocks that are in leading groups. Leading groups. It's a statistical, that's my background. It is a statistical fact that stocks in leading groups normally outperform other stocks. So we look for the leading groups. There's 197 industry groups in the market search program. It used to be daily graphs. I've got daily graphs chart books in here from the 1990s. How about that? So focus on the weekly charts and then narrow it down to the daily charts, looking for clean and simple base entry. Now you can say, Pat, why do you say that? Let's be very pragmatic here. Years ago, when I was teaching this at IBD meetups, I talk about this on the stage, and somebody would say, this is awesome. I found a pattern that I don't think anybody knows about it. And I would say, okay, let's think this through. If we're buying something, do we want other people to buy it too? Well, yeah, of course we do. That lifts the ship off the pad. If nobody else knows about it, they're not going to buy it. This is why at Mission Winners, we focus on really simple chart patterns. And it doesn't need to be the cup and a handle. And I'm going to say this, okay? And again, I was an IBD meetup guy forever. And Bill O'Neill changed my life. I will tell you that right now. Honest to God, what a great guy. Focus on simplicity. If you wait for the cup and a handle, it's going to be tough to make much money because it doesn't happen that much.
Right.
If it's an easy pattern to see, again, it increases the odds that other people see it and they'll buy also. And that's what we want. I know you can say, you've mentioned this. There are certain things that need to be said over and over. Many of you are parents. How many times did you tell your kids, don't touch the hot stove? Okay. They learn real quick too, right? Anyway, simplicity works. It really does. Sorry for the long answer, but I try to be thorough.
No, that's absolutely beautiful, because part of the deal is, I think it was Leonardo da Vinci or somebody who basically made the statement that never neglect the sophistication of simplicity. And that's absolutely phenomenal. So, Mike, go ahead.
Yeah, I have a follow-up to that, and I'll ask both of you, because both of you have been at this a little bit longer than I have, and I think that, well, first off, how great is that that we have all these veterans here in one room, and I look up to both of you guys. But
Thank you.
Thanks, Mike.
So was this thinking or this thought of, oh, trading's easy? Was this something that's always been out there, or has that become more prevalent? Well, with social media and Instagram and people posting like, oh, wow, like 100% returns, you could do this. Like, is that more of a problem now than it used to be, or do people always think that, oh, this is easy?
Pat, go ahead. I'll let you go first.
Oh, okay, sir. I was just going to say, if you wanted to take it, I would. Michael, I think you bring up a very interesting point, and I'm in agreement with it. I think social media is a wonderful tool. However, the message sometimes I feel is a little too sugar-coated, and that, oh, that's easy. Here we go. Let's just do this. Oh, we'll all do the happy dance because it's, this is great. No, I will share this. It takes a long time to get this down. And somebody, oh, darn it. No, I'm not going to lie to you. It takes time. There's no substitute for seed time. I say this constantly, and I said this at the IBD meetups. If you want to get good at reading and understanding charts, look at a lot of charts, and you will develop a mindset of what works. You'll look and you'll say, oh, that didn't work. Oh, that didn't. Oh, look, that one worked. This one worked. What do they have in common? And you will quickly, it does take time, but eventually, quickly, you'll get to the point where you'll say, I know what to look for. I know what to look for. And I'll back up here and say this, and very pragmatic about this. And again, one of my degrees is in psychology. What's going on in the head? The idea of, I want other people to see what I see. Mm-hmm. Why? So they'll buy it too. Right? Mm-hmm. Isn't that what we want?
Right on.
So that's what I key on. I don't do fancy patterns. That's just me. If you do, fine. But I'm very big on, I want other people to see it so that they will buy also. Because let's be pragmatic. None of us is going to lift the stock by ourselves. Okay. Mm-hmm. It takes money to push these stocks up. Money is translated into other people seeing it and buying it. And then I'll take this a step further. And this is wonderful. This is a great tactic for all of us. Okay. When you see a clean and simple base and it breaks out and you buy it, look for volume. Look for other people buying it. And you can see volume on lesser time frames, not just on the daily. You could take it down to hourly or 30-minute, even 10-minute. Look for that volume. That volume is confirmation that other people see what I see or what you see, and they are buying also. And flip that coin. If you don't see that volume, it tells you, I'm the only person in the world that saw this, maybe. I better be careful.
Right on. Right on. So, yeah, and I just want to amplify on that is, that concept of, trading being easy. Okay, I used to fly jets off of naval aircraft carriers, right?
Whoa.
One of the things, one of the toughest things ever, fear factors off the chart and all that kind of stuff. And let me tell you, learning to trade and keep a proper mindset is actually been harder for me than flying jets off of a carrier at night. Now, those of you who might be able to relate with that, that's cool. Okay. I mean, I'm glad you can, but spot on. We walk into trading. I walked into trading. I can speak for many people. I walked into trading when I got started back with it back in 1987 with the misconception of, hey, I'm a brilliant engineer. How hard can it be? I've landed aircraft, planes on aircraft carriers and all that stuff. Little did I know, but it was a balance. I mastered the mechanical side of trading fairly quickly, had great rules, all that kind of stuff. The mindset piece has took me 15 plus years to get to the place where I was finally confident in not just my system, which was very simple, similar to what Pat's talking about, but confidence in my system. But then what was more important was confidence in myself to follow my system. Does that make sense? And, if that resonates with you guys that are listening, hey, just give us a thumbs up. down in the comments section. Let us know what you're thinking. You know, if that resonates, say right on, brother. Anyway.
No, that's awesome. Dennis, the first thing I want to say to you, thank you for your service.
You
And I
betcha.
mean that from my heart.
Thank you.
God bless you
And-
for what you did.
Thank you. And God bless my wife for what she did, putting up with me for 23 years of service.
Man, that's intense stuff. It's ironic you bring this up because yesterday the Blue Angels were in town.
Oh,
And,
cool.
And it was, my wife took video. When they were coming in, they were less than 200 feet above us coming in. It was that low. It
Wow.
was
Right on.
awesome. Good for
Yep.
you, man. That's awesome. The price of your stock just went up in my book right there. That's cool. Dennis.
Thank you, Pat. So,
Wow.
hey, can you explain why the strategy of buying more when your trade fails can be dangerous?
Oh, what a great question. I'm brutally blunt with all that. Folks, let's be honest. We're talking something that's very, very important. We're talking about your money. And I'll take that a step further. If we screw up, it can impact your health, right? Let's not sugarcoat this. This is serious. And there's a quote on Wall Street that is dead wrong. Don't get sore, buy more. I've said it before. It's wrong. You are wrong. Don't make yourself more wrong. Don't average down. What if it keeps falling? Then what are you going to do? You've compounded the issue. You've compounded the problem. We've got a couple of important assets. One of them's financial assets. The other one's mental assets. You got to protect both of them. Nothing's worse than coming in, and I'm ranting here, but I'm going to say it. Nothing's worse than coming in every morning and you look and you go, God, I'm down on all these things, which causes you to become afraid, which then causes you to miss other opportunities. So by keeping losses small, and again, one of my degrees is in psychology. It helps me, it helps this head, but you don't even need that. It's common sense. It protects you financially, but it protects you mentally, where you don't become frozen. They talk about it in Jack Schwager's book about the freeze, okay, in Market Wizards. You don't want to experience the freeze. Your first loss is your best loss. And I need to say this this is important too. I'm not talking about day trading. I'm not talking about looking at 5-minute chart. Oh, I'm in, I'm out, I'm in and out. No. As we discussed at the beginning, focus on daily and weekly charts, and you will find through time, the simple bases are the best launch pads for a good return. And I said this earlier, and I'll say it again. If you wait for the cup and the handle, you'll starve to death. All right. Master a couple of setups, own them, make them yours. And always look for volume confirmation when it's pushing through the pivot. It will really help you. I'm sorry for the long answer, but it's important. We're talking about personal stuff. Anyway.
Yeah, Pat, I've got a follow-up question to that. And the follow-up question is this, because this is something that I struggled with when I was first starting to learn Can Slim and learning how to cut losses learning how to cut losses, that in and of itself is fairly easy concept, right? Price falls 8%, you cut it. That's easy to understand, but to actually act and do is a little bit harder. And I'm curious to hear from your perspective why you think that it's harder to cut the loss at 7 to 8%. Why people struggle with that part of, I don't want to take the loss. Is it something to do with the money aspect of it? Is it something that they believe in the company that, I did all this work and, it's going to go up for that reason? Well, why do you think that people struggle with the taking the loss?
That is a profound question. And again, my background is in psychology through study and research through the universities in crud. Taking a loss means you have to accept this fact. You're wrong. You're wrong. You made a mistake. A lot of people can't accept that, because if I take the loss, that means I'm wrong. Well, shoot, then I'm not going to take the loss. No, folks, two major variables, foundations Emotional, financial, or mental, okay? Physical, well, there's 3 right there. The idea, don't argue with price. Don't take it personally. The stock is not a living entity. It doesn't know that you exist. It doesn't know I exist. Get in line with what's happening. And that does something very important. When we accept that reality, it lessens stress. So, God, what do we do? This chart's telling you what to do. And you just get in line with it. Less stress equal or leads to clearer decision making. And that'll really help you. And that is also why, and at Mission Winners, I talk about this all the time. I talked about it at the IBD meetups. Clean and simple bases that everybody can see. It's easy to see. If everybody can see it, it increases the potential that they'll buy. And then I'll also say this, and maybe you think I'm committing heresy, but I'm going to say it. If you wait for the cup and the handle pattern and only do that, you're going to starve to death. It doesn't happen enough. I'm not criticizing Bill O'Neill. No way. He's great. He changed my life. But you have to have a couple of other pattern setups that are statistically reliable and consistent, and use them. Use them. That's it. I'm very big on simplicity. We can get elaborate, but it's just, that's why I don't have all kinds of, if you do, fine. But I don't have stochastics. I don't have oscillators. I don't have anything else on my charts except price and volume and moving averages and simple trend lines. And a clean and simple flat base that you see it, I see it, increases the odds others see it too, and they'll buy. I'm very pragmatic with that. Anyway, long answer, but I want to be thorough.
I have one more follow-up question, if I may, and it has to do with the bases and the number of base patterns or setups that people should learn. I'm curious, Pat, how many setups do you think that somebody should learn in total to have a complete system, and how many should they try to master at a time? Because if we're trying to do too many things, we could be okay. Right, the jack of all trades and a master of none, and that tends to lead to drawdowns and blowing up accounts. And yeah, a friend told me that. Yeah, no, that's me. I've struggled with that in the past way too many times. So I'd love to hear your thoughts on that.
Sure. What I've found, and this sounds arrogant, no, it's just because I've been doing this a long time. I know I have looked through the years at millions of charts, millions. By doing that, and I'm grateful I have, it's helped develop a quote unquote good read on what works. You'll see it over and over in the charts. You'll say, well, God, that went up and it failed. That one, oh, look, that one went up and it kept on going. Oh, that one, oh, look. You'll see it in the charts. And so I've narrowed it down. I'll still use the cup and handle, folks. Let me tell you, I'm not saying don't do that. Okay. It's a very reliable pattern. I'll use it when it's there, but I will also key on simple bases, stocks that have been going sideways for a couple of weeks to a couple of months, just going flat. It's just going flat and it keeps it going up and it bounces. And then finally it pushes through there. The last of the sellers are gone and there's the buy, and it pushes through the line with volume. And there's one other setup that I use that I love. Okay. It doesn't happen very often, but it's great. And it's called, I'm getting a little more elaborate here. It's called the higher low setup. What is the higher low setup? A stock has been steadily falling for a long time. All right. And then it goes up on some volume. It's important. That tells us maybe the selling's borne out. And then it pulls back again. But when it pulls back that second time, it doesn't fall as far as it did on the first low. So it tells us there's less selling pressure. And then it starts to pick back up again and look for volume. And it's literally a higher low where here's the first low, okay? And then it fell, and then here's the second low. Falls, it's a higher low setup. When you get that, it tells us that the selling is most likely worn out. The sellers are worn out. And then look, as I stated, look for that volume trigger when it goes across the clean tops. That is a very reliable trigger to buy, and it works. And I'm going to take it one step further. I'm big on risk control. If you buy it and then it starts to fall back down and take out that low of where you just bought it, you have to sell it. You were wrong. There you go. We never argue with the charts. The charts are the final arbiter on what to do. And the last thing I'll say in relation to this, and I'll probably say it several times in this video that we all do together, never average down. Please.
Right on.
You were wrong. You'll make yourself more wrong. Don't do that. Anyway, I'm sorry for the long answers, but I just want to do the question. I want to do it justice for everybody so that when it's done, people said, I understand what he means. That's my goal.
Yeah. Yeah. Pat, I one of the things, it sounds like you and I trade a similar type of thing. I have 3 setups with basically, I have 2 triggers, setups and triggers stuff. And I have preached for a long time that aspect of don't buy the lowest low. A lot of people are out there fishing for that bottom. And I go, let it prove itself. And the way it proves itself is you basically get a rally attempt. The rally attempt then comes back to test towards the past low.
Yeah.
Now I will, I confess, I like my momentum indicators. I use the True Strength Index as my momentum indicator.
Sure.
Because I love it because it works on all time frames for me. And also it is very reflective of where momentum shifts. But but it has to be confirmed with price action because price is king. We talked a little bit about the people thinking trading is easy. And I know Mark Minervini makes a statement in some of his discussions. He talks about that. He says he thinks that part of the issue is that it's too easy to get into trading.
Yeah.
What do from your perspective, 2 questions. One is, what was the biggest mindset challenge you had to get past to become a successful trader? That's part 1. And then what about that concept of the entry? How long will it take people, if they're following a really good process, similar to what Mark Douglas recommends of putting in 400 trades to learn your system, right?
Yeah. Yeah.
And that could take 4 to 5 years. So the first part of the question, and then the second part of the question, what was the challenges you had with mindset? And then is there any way you could accelerate your learning so it doesn't take 5 years to become a profitable trader?
Great, thorough questions. I'm going to get to the accelerating one first.
Okay.
One of the best things that we can do, and folks, by the way, I'm not being funny here and flippant. We're not just talking about your money. We're talking about your health. Because if it screws up bad, it could have a negative impact. I've had grown men calling me up on the phone and say, I don't know what I'm doing. I mean, they were at their wits' end. And so we had to talk them off the ledge. Okay. So one of the best things that we can do with an open mind to learn this better is look at a lot of charts. You go, what? No, look at a lot of charts and don't go through them fast. Look at them slowly and study them and say, oh, that one worked. God, I wonder why it worked. Yeah, okay. Well, that one didn't work. Oh, that one worked. Go through that. This is one of the best things that ever happened to me was subscribing to Daily Graph's chart books. Now, they're gone. You can't do it. But this is an old Bill O'Neill product. Why? Because instead of just making screens and narrowing my focus, I had to look at, I guess it was 1,200 charts every weekend, page by page. And it developed a tremendous acumen on what works. You look at a chart and go, boy, that made a good move. You see another one, oh, that one made, and you start to see the similarities in the chart patterns. And it'll really, really help you. It'll speed up the curve. You could say, well, how could I do that? Now, I'll give you a broad brushstroke filter that you could do. If you are a subscriber to Market Search, and by the way, I don't work for them. I don't get anything from them. I don't want you to think like I'm pushing their products. I'm not, okay? For me personally, I couldn't do it without them, okay? But if you've got a great program, good for you. Make a screen or a program and run it this way. All stocks over $12 a share that trade more than 200,000 shares a day, okay, that are within 20% of 52-week highs.
Yeah.
A broad brushstroke screen. And then sort it. Take that master list, there'll probably be 600, 700 stocks, and then sort it by percent off high. Not by industry group, nothing like it. Sort it by percent off high. You can do this on a TC 2000 program, all right? And then go through the charts slowly and look at them. And you will, and look at both weekly and daily, you will quickly start to see patterns in your head like, oh, that didn't work. Oh, God, there's one just like it. Geez, that one didn't work either. That didn't work. Oh, that one worked pretty good. Look, oh, that one looked pretty good. And you'll start seeing themes very quickly. With a matter of a couple of weeks, you will see themes, patterns that consistently happen that lead to A, failure, or B, success. You'll train your eyes and mind on what to look for in the charts. You'll speed up that process big time, and it works. Now, I'm going to go further here. You don't mind if I go a little further with this, do you? Am I okay?
Go right ahead.
Okay. The idea, when you do that kind of a screen, a loose screen like that, you're going to see a lot of crud. So then tighten it up a little bit and say, I'll look at stocks with those constraints I gave, but I'll only look at stocks that are within 20 or 25% of 52-week highs. See, now you have a little bit better quality, right? I mean, there's the fishing hole. I come back to the analogy. There's two people fishing. Every 5 minutes, the person in one hole catches a fish. Every 30 minutes, the person in that other hole catches a fish. Which hole are you going to go fishing in? The one where every 5 minutes they catch a fish? Well, guess what? We're looking for winners. You want to look for winners? A way to train our eyes is look for stocks that have won. So how could we do that? Yeah, start with stocks that are within 20 or 25% of 52-week highs and just run it. I'm going to give the constraints here, though, for us, okay? Let's kind of nuts and bolts this and get this down because I don't want to waste your time. Look, don't do low-price stocks, okay? Most of my filters, I got them cut off at $20, all right? I don't look at low price. That's just me. If you do, fine. But I want quality. Institutions don't buy $10 stocks. They're looking for things they can plow into. So cut it off at 20. Focus on stocks that trade 200,000 shares a day. Focus on stocks that are within, in this screen I'm giving, that are within 20% of 52-week highs. There's just three constraints. And then run it and go through. And you will just scan the charts. And here's a great tactic. Sort it by percent off high. Let me say that again. Take that screen and sort it by percent off high, off 52-week highs. You will see the ones closest to 52-week highs. Those are the ones that come first.
Right on.
Oh, ain't that what you're looking for? The ones that are strong, and then go through and just look at. And this is another great tactic. Look at both weekly and daily charts side by side, as we discussed earlier in this conversation. And you will start seeing themes that go, oh, that didn't work. Oh, God, look at that. Oh, those two work together. Yeah. Oh, look, there's another one. And you'll say, eventually you get to the point, and it might take, I don't know, probably 2 weeks. You'll say, that's what I'm looking for. The heck with all this other stuff. I'm doing this. Don't be a jack of all trades. Be a master of one or two setups. Make them yours. And I'll say it again. Maybe I'm committing heresy, but if you wait for the cup and handle pattern, you're going to starve to death.
Right on.
Yeah. You got to find a couple of other patterns and master them and stick with them. And I'm going to say this again, and this is important. Look for that volume surge through the pivot. That volume surge tells you, as I stated, other people see what I saw or what you saw, and they're buying it. What's up here in your eyes? They'll train you for what to look for. Now, I'm just talking from a technical perspective. We can get into the fundamentals eventually, but I just want to lay that out. I'm sorry for the long answers, but I really want to be precise and specific here. I mean that. That's a passion of mine. Anyway.
Hey guys, have you ever wondered how understanding the truth about trading could transform your financial journey? Mike and I would love to hear your thoughts and suggestions on who we should invite. We've had Pat on, we've had Jeremy on, and they were excellent guests. Let us know who you would like us to be talking to next. So we would like to get a couple of different guests on, one guest on a month. And then on the other days, because we run the Trading Truths podcast, the first 4 Mondays of the month. And then forgive us, but we're going to take the 5th Monday off to regenerate. Which brings me to Mike. You look like you have a question for Pat. I can see.
No, go ahead.
Well, my question, Pat,
yes.
I'll follow up with that, is, okay, I know that you spend a lot of time over on X, on Twitter, if you will, because you share a lot of information over there. And so it appears like you are on a lot. Your switch is clicked on. Now my question is, what does your downtime look like when you basically flip the switch and say, you know what, I'm going to go invest some of my energy somewhere else?
Great. That's right there, folks. That's the best question today. Amen. As you know, my background, one of my backgrounds is in psychology, and I've helped some people through the years with some I'm not a psychologist or psychiatrist, but people going through some really rough times. Okay. We have 2 assets. Well, we have more than 2 assets, but we'll simplify it. We have what we do here, financial per se, and we also have mental. Okay. But we also have health. And complementing the question, I'm asking you, please, and I don't know you all, but your fellow human beings, please take care of yourselves. This is the most important thing I'll talk about today. Please take care of yourselves mentally, physically, spiritually, financially. And I'd put them in that order, to tell you the truth. The best asset we have, the biggest asset we had, is between our ears, and we have to protect it. At the same time, physically, I'll just share this with you through my advanced psychology things that I've had. Okay, I'll never forget. I had a professor say to me, and you go, boy, you're getting deep here. Yeah, I am, because it's the real world. He said, I want you to hold up your hand. So I'd like you all to do this. Look at your hand. Move it. Look at the joints. Look at the tendons. Okay? Really move it. Look at the muscles. And I'll never forget, the professor said, you see that hand you're looking at? You'll be buried with it. Take good care of it. And I'm not trying to get deep and dark here, folks. I'm just speaking from my heart. Take care of yourselves in all respects, mentally, emotionally, physically, financially. All these things, they blend together. And one of the best things you can do is go for a walk or exercise.
Right on.
I'm not kidding. I exercise every day. There's a football stadium near the house, and when I'm having a wild time, I'll go to that football stadiums and I'll crank out 300 to 600 stairs in the football stadium in 90-degree heat. I'll push it off. So do things to protect yourselves. I know you say it has nothing to do with stocks. It really does. Because if our head isn't screwed on straight, and if we're sick, we're not going to be able to do this.
Yep.
It's the honest to God truth. So please take care of yourselves. That's, it has nothing to do with stocks. No, it really does. It has everything to do with life and stocks. Everything.
Right on.
Just be there for yourself. And I'll also say this, and I hope this doesn't tick anybody off, okay? But I'm going to say it. Pray. I'm not going to get all religious on you. Don't worry about that. But pray. Pray for health. Pray for health for other people. Pray that you can help other people. Do that. It makes a difference in your life. I'm sorry if I'm getting fun on it. No, I'm not sorry. It'll help you. By the way, I'm speaking from my heart, and I will tell you this. Everything I'm sharing with you, I wish somebody would have shared with me years ago for balance. And so I had to figure it out a lot. And so that's why I was a lot of swimming, a ton of biking, a ton of running, a ton of jogging, a ton of stairs, a ton of weightlifting, the whole bit. Just do stuff.
Yep.
And then try to get away from this. Be engaged in other things away from this. Strive for balance. It will really, really help you. This life that we have, this isn't a trial run. This is it, folks. So take care of yourselves because you have to last a lifetime. Yours. And I mean that. That's you're talking to a guy who has been through serious stuff before, health-wise. So there you go. It ain't got nothing to do with stocks. No, it really does, because if you're sick, you can't do this.
Yeah,
you can't do it.
I agree.
Just important stuff.
And you're preaching to the choir here, because both Mike and I, we stay physically fit. Yeah, that's one thing. I think I'm probably the ancient trader here at 72 years old, and
I'm close, babe. You're good.
And people stare at me as I'm running around my neighborhood. I live we live up on a top of a hill here on Oahu, and I run the hills of Makakilo. And here recently, I've gotten into not just running. I reduced the amount that I run, but I do sprints.
Yes.
And I tell you, man, it is absolutely phenomenal. I know Mike works out, so I don't want to be remiss, because I promised everybody at the very, very beginning, if you remember, that Pat was going to reveal who the rock star he spoke to that got him on the right path. Okay, Pat, drum roll, please. Who was it?
I'm blessed in this way. It was several people. Okay. And I'm sorry. I know you said one, but I have to share this. The first guy, and man, am I grateful I met him. And we had a great talk. Martin Zweig, Dr. Martin Zweig. I met him, and it was before the crash of 87. And he imparted so much wisdom to me that I'm thankful for this. All my managed accounts missed the crash of 80. We were all out well before the crash of 87. I credit Martin Zweig, and I was deeply saddened when he passed away. But there's a couple of others. Ed Sakota. I met him at a traders conference, a technical traders conference in San Francisco. If you don't know who Ed Sakota is, you might want to Google him. Seykota. Seykota. MIT graduate. You go through there and you read what he accomplished with returns of, they say, estimated of 250,000%. Okay, over time. Very interesting man, very intense man, but kind. But this was the part that was so neat, team. No, I'm programmed to say team. This is for everybody. Sorry. Folks, it was just him and I talking one-on-one. And every time I said something, he would tilt his head back and look through his bifocals and say, why do you think that is? I would say something like, I've noticed that these stocks, when they are basing, when they push through, when there's volume there, it leads to a good gain. And I would just say that to him. It's just him and I talking one-on-one. And you go, why do you think that is? He wasn't being antagonistic. He was forcing me to think it through and defend my positions and thought processes. That really hit me hard. And another man, Bill O'Neill. Bill O'Neill, I met him a couple of times. I'm grateful. And he's just a kind soul. And this was at CANSOM Level 3 seminars. And just good conversations. David Ryan was good. I met Mike Webster and had a nice talk with him years ago. Just good people. I'm grateful for the people that I've met. Very, very thankful for the people I've met. And that they helped me, though. So if I had to round it up, though, I'd say Martin Zweig. I'd say Ed Sakota. Okay, Ed Sakota. I'd say Bill O'Neill. Those three. And I just have to go further with this. Please, this is something I wish somebody would have said years ago to me too. Don't do this for the excitement, okay? Don't get a big ego. It's like, man, I'm really going to town. No, the market has a lot of ways to humble this. Just be thankful. Be thankful for everything you have. Be thankful and humbled for everything you have. And if you find yourself losing sleep over your stocks, you own too much stock. Sell down to your sleeping point. I read that.
Right on.
And it's
right on.
It's the honest to goodness truth. I'm just speaking from my heart. So anyway, I'm sorry for the long answers, but I don't want somebody walking away saying, God, I didn't get an answer on this.
Right
Try to
on.
be through. That's just
Mike.
me.
Mike, what questions do you have for?
Oh, I'm digesting that answer because that was so good.
Thank you.
Let's see.
Don't ask me who my barber is. We ain't going there.
Hey, Mike,
I got to tell you this. This is really cute. My oldest son, he's got 4 kids of his own now. He's a big guy. He's over 6'8". He's a baseball pitcher. Yeah, I was Mac Daddy. But when he was just a little guy, a long time ago, he looked at me and just so sweet, and he says, "Dad, you're getting more haircuts all the time." And it just he didn't always lose my hair. It just touched my heart. You know, kids are great. Love them up. love them up, folks. It goes fast. Anyway, sorry, I had to interject that. It's
no problem. Hey, Mike, I really like kind of the last question that we had talked about, or we have there. Can I read it?
Yeah, go for it.
Okay, hey, Pat, you in some of your dialogue or emails you sent back and forth with us, you talk about mindset. So why is having a proper mindset crucial for success in the markets? And can you share some tips on developing a successful trader's mindset?
Yeah. Oh, deep questions. I love this. First off, it's a business. Don't make an idol out of it. Do the best you can. But if you're losing sleep over it, you're carrying too much stock. All right. I also dovetails into a lot of different areas. I encourage you all to exercise. And I encourage you, if you don't pray, okay, we're not going to get all spiritual here, but immerse yourself in things away from this business. Immerse yourself in other people's lives where you can contribute to them in some way, shape, or form. I was a scout leader for years, and I'm not bragging, please. No, I'm grateful for all this. I helped out with a youth group at a church for 18 years, and just reaching out and loving these guys were all juniors and seniors and sophomores in high school. Man, they were going through a rough time, and it was just good being there for them. Not about me, just being there. So have balance. Be there for other people. Volunteer someplace. Reach out and help somebody. I love this quote, okay? I was up at the track and a guy said this to me, 10 years ago. We were just talking about being there for others. I didn't even know the guy. We just got into kind of a philosophical conversation. And I'll share this quote with you. Be the person you needed when you were a child.
Oh, that's good.
And think about that. It's not my quote. Be the person you needed when you were a child. And so then take that mindset and say, yeah, you know what? I'll go out there and see if I can enrich somebody else's life. All right. And you don't need to go overseas to do it. You can find your neighbor next door. They just be there. And and you'll be fulfilled by that, and that will help you in so many different realms of your life. You go, that ain't got squat to do with investing. No, it really does, because if you're screwed up in the head, this ain't gonna work. Hold on a second, bear with me. I bet this is Texas. Hey, buddy. Hey, I'm in a webinar. Can I call you back? No problem, buddy. Appreciate the call. Sorry about that. The guy I used to trade with. Anyway.
All right.
Sorry for the answers. Long answers.
Yeah.
So, Mike, any final thoughts?
Well, well, we've mentioned prayer a couple of times in this. I actually wanted to touch on this briefly, if I may, because I think that whether we say that we believe in God or not, that there's always something that's our primary focus. And I think that could be God for a lot of different people, right? So well, whatever our primary focus is in effect God at that particular point in time. So I would say that prayer is very important, because if we are going to put something in that God role, that primary focus, it should be something that's going to benefit us, something that has our best interests at heart. So, well, when you talk about the spiritual aspect of just our spiritual health, I think that's extremely important. And I don't say it flippantly. I speak about that from personal experience. So when the more that I've put prayer at the primary part of my life, the more life has made sense.
Yeah.
Right on.
Yeah.
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 And I let me add to that also. For the longest time, my family and I, we get together and we develop family goals at the beginning of every year. And many years ago, I had the great fortune to be at a conference with Zig Ziglar, where Zig Ziglar was the speaker. And it was a 2-day conference. I got to hear Zig. And he basically said, follow the 5 F's of life, and you will be super. And the first F is, as you prioritize your life. The first F was faith. The second F was family. The third F was friends. The fourth F was fitness. Well, I know you're going to like that. And the final F was finance. And the prioritization of that you like that? I mean, and
Yes.
what we found as we develop our family goals every year, we weigh them against those 5 F's, and we'll have a goal for every one of those F's. And let me tell you, it has led to some exceptionally wonderful times. And so, guys, if you'd like to have Mike and me on your podcast, or somebody who does a podcast who would like to, and who you would like to see us 2 handsome guys on that podcast, please, one, let them know that we're not just hanging around, because we're not going to let the moss grow under our rocks. And but anyway, let us know. We can make, to help us make that happen. And then secondly, as we talked about, who would you like us to bring on to discuss other real challenges and solutions in trading? That's what we're all about. Basically to dispel the myths and disbeliefs, not disbeliefs, but limiting beliefs that people have about trading through the trading truths. And so, Pat, I want to give you the final word, just to say whatever you would like to say. You've got 30 seconds.
Oh, thank you. Thank you very much. Thank you both for having me. I appreciate it. I'm honored that you asked me. And a passion of mine, you could probably tell, is helping other people. And, I have to say this. That was the reason I started Mission Winners with Owen, was to help other people. If we can't do that, then what's the use of being here? And speed up the learning curve on, in the realm of investing. how to get better at this, what to look for, and to help yourself, but also help your family and maybe help other people. So
Yeah.
that is, and I need to share this, the acronym. This is important. Mission, markets, industries, sectors, stocks, institutional support, outstanding management, outstanding product, outstanding service. And the N is, to me, the most important letter, and it coincides and complements almost everything we talked about today. Never say never.
Right on.
Keep going, keep going, keep working. If you have a setback, say, okay, I'm going to study this, I'm going to learn from this, and I will be that much better the next time. And
Awesome.
you will be. You will be.
Awesome.
I appreciate both you gentlemen, though, and what you're doing, because you are providing a service, a good service. You're helping other people. You're trying to speed up the curve for other people. That's huge.
Right on.
Can't do that, then what's the use? So I'm honored to ask me.
Absolutely. Pat, well, where can people find you? So we could find you at missionwinners.com. Well, where else can people find you?
I had the city jailhouse. No, I'm kidding. I'm kidding. No, that's it. And I'm on Twitter. I'm on Twitter, Patrick Walker. But Mission Winners is our company, our site. And it's one we developed quite a few years ago as far as, and I thank you for asking me, Michael, for helping people, teaching people. And again, that's my background from teaching years ago, teaching people what to look for fundamentally and technically in the charts. And then the triggers for buying. Hey, when do I buy this? Okay.
Right on.
And we make a key list every day, a list about 15 to 25 stocks. And that's my go-to list for the next day. Nothing else. You say, do you go all over the place? No, that's it. That's all I look at. And with trigger prices put in there to the penny. And always, I'm looking for, and this is important for everybody, look for good price action backed by volume. We started this conversation talking about volume. I'll say it again. Volume means other people see what we see and they're acting on it. And that confirmation is wonderful. And stick with quality. Stick with quality, and you'll do much better. Anyway, but you gentlemen, I thank you for having me. This is a good, you know what I like about this? It's a real world, it's a heartfelt conversation.
Thank you. And Mike and I got together and we decided we were going to do this just once a month, but we said, let's do it we're going to do it twice a month, but just said, let's do it 4 times a month. And we're building on that. And because we think there's a message out there that we want to share. Mike and I have a goal. I'll share the goal with everybody, guys, is Mike and I have a goal of reaching 100,000 people with not just a message of financial fitness, but also to introduce you to our Savior, Jesus Christ. Okay, I'm going to say it. That is our goal. And I will unapologetically say that, that we believe that finances and spiritual fitness go hand in hand, along with mindset, fitness, and all that kind of stuff. And that's as far as I'm going to go with that, because we are over. But I just want to let you know that. I mean, that's what Mike and I are about. Here we got a Assembly of God guy with a charismatic Catholic guy. And let me tell you, we're rocking it, baby. So that's it for today. Thanks for joining us. Aloha. Make sure you share this with a lot of other people. So Pat, hang on. I'm going to end the stream and we can chat briefly.
Sounds great. Thank you both. This is awesome.